All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, 7/28/2017. Let's take a look at SPY here. Some fireworks yesterday, post-Fed, when everything was looking good. We got this weird reversal early in the day after we were showing a lot of strength, and it looked like the market was ready to continue. Bam, we got hit hard. Started to look really ugly at one point, but did recover nicely and get back up over the 9. Now, this morning we're down slightly, so we're going to watch this level very closely. And then IWM here, down a little over 0.5%. It looks like I'm having some issues here, but also off the lows, not recovering quite as strong. And then the Qs getting hit the hardest, but recovering nicely back up over the 9. Really wide range here. And this morning down a little over 0.5%. So look at this. We've been talking about this kind of ugly pattern here. This is starting to look like that topping formation. And if we do now I took a shot adding Netflix, but if we do start to see this level weaken here, these have been, generally these big dips have been holds. Hold, which is why I took a shot with one stock, seeing if this level is going to hold. But if we start to flow down here, we actually may have a shorting opportunity as a failed breakout here. We're basically right at that level where we're looking to close below the old high, and we haven't done that yet. But if we close down here today, we could balance out the one long position here with a short. So we'll watch that. Let's go over yesterday's trade. It's with post-breakout FANG stock. Netflix, basically, I was watching for the hold of the 9 here. We got better value. We know this thing has been at 190, and if we do recover here, I think this is easily going to get to 200 and maybe even break 200. So, and then our stop is going to be at the low of this range, which is going to be, depending on what you use, if you use this level, maybe 173, 174. If you use this level, 175, and I wrote 175, but maybe I'll change that a little bit slightly. It's a small position size, so it doesn't make too much of a difference here. Actually, not small position size, but at 150 shares, each point only is $150. So not that big of a deal here, and I would still get the 2-to-1 going to 200. So that's the idea behind this trade. It's got good earnings, it's got good news. Hopefully it holds up well, even if the market does pull back and stays above our stop level before the market has a chance to recover. Now, I took profits earlier in LABU, was not liking the action here when it hits 69 something. And we talked about a trailing stopping at 69, so it ended up being a little win. When at one point I did have 2-to-1 and gave that up here, but I would do that again, because generally, with these momentum stocks, they'll recover here, but you can't do anything about, when the market tanks like that. So little profit in LABU. Then I was stopped out of Tesla, which was a little frustrating because it did come back up here. Question I got here was, why did I loosen my stop? I talked about 332, 333 being the stop level, and I let it go down to 327. The reason for that, whenever we get these big moves down, especially if it's not going to impact my profit level too much, this was only 50 shares, so holding another 4 or 5 points only made a $200 difference. So it's $200, $250 difference. So it's not that big a deal. But what I wanted to see was there going to be an intraday dip and recovery? It kind of did recover, and it happened to be that was the low where I got out. But I couldn't let it slide anymore. I still wanted to keep this a small position, and then we know early next week we're going to have earnings on the 2nd, so there's no point in waiting because I'm probably not going to get the 20 or 30 points now. So very small loss here, no big deal with the Tesla, and that was balanced by the win in LABU. So that was the idea behind what I was doing there with those 2 positions. We're in only Netflix now, and we're probably going to keep it that way unless there's a major reversal today, or maybe a shot at shorting the Qs if they close below the old high. So now what are we looking at here in terms of sectors? Let's start with financials. Holding up okay. We're right at the gap fill right now. So we want to see this gap fill hold, which it did yesterday. I mean, it broke through, so this technically has filled. Intraday it filled. But let's see if it holds that level and bounces now and gets up over the 9. So we're going to watch that very closely. XLE energy looking very strong. Thought about taking this yesterday, but it's given us so many fake outs, oil and energy, that I want to make sure it holds this level. But we're starting to break this. We can use the 50-day as a trend line and starting to break that. So if there was anything I was considering taking today, maybe it's energy. If it can show some more strength here at this level, and if it does, maybe then it can run up to this range here at 70. And if I do take that, of course, we'd be taking the ETF, ERX, the leveraged ETF. So that is one of the few things that's high on my radar today. FSLR is breaking out this morning on earnings, so we'll keep an eye on that pop. I've added to the earnings list ADP. Now, we're not trading these, but they're on the list now. Tree, big breakout, classic breakout. B Corp, classic breakout, and then AXTI, a low floater here, breaking out as well. So we've got 4 new additions to the breakouts list. And then I'm also watching HOG. This is classic gap down reversal. We were watching for the break into the range. Didn't take it yesterday, 1, because of the market, 2, because it popped a little higher than I would like into the range. But if we consolidate a little bit here, I can get in a little better value. I would look to enter here. So HOG is looking very strong, especially on a day where the market was iffy. And then Amazon is gapping down big this morning. Poor reaction to earnings, probably an overreaction, just like Google. And I think we've done this before with Amazon. I think we traded it back in here in February when it had the big earnings reaction, and look what happened here. That set up the next run. That could happen again, although the market is a little different right now. But at some point, in these strong bellwether kind of tech stocks, big tech, these gap downs are buying opportunities. We just need to wait for the opportunity. We're still keeping track of Google as well. And for Google, I'm going to wait. Either it continues and shows strength, or gets up over the 50-day moving average. One of those two things, and we have our signal to get into Google. Same goes for Amazon. Remember, guys, a heavy stock, but even with a few shares, if this thing runs to 1,050 or 1,100, you've got a nice win. So we're going to keep an eye on those, and that's basically it going into the weekend. I'm not looking to do anything else. So it's HOG, it's Amazon, it's Google, it's TQQ or XXX if shorting it, if we closed over the failed high, maybe financials, and that's all we're really looking to play today, and energy, ERX. So that's what we're watching. If not, we'll just go into the weekend with one position and see what the market does leading into next week.